Hello everybody, welcome back to our SSCMA classes. So we are going to resume our direct taxation and indirect taxation classes. Okay, so we already done residential status of individual. Let's go further. So we are starting by residential status of HUF. Now when the HUF is resident and when it is non-resident, if the management and control is wholly or partially done in India, if the management and control is wholly or partially done in India, in that case, the HUF is going to be resident of India. Hope so this part was clear to you. Okay. But what if the control and management is done outside India? Okay, or if it is done partially outside India, but if it is done wholly outside India, in that case that is going to be non-resident. The HUF is going to be non-resident. We are not talking about the partially, because we already take in the very first part I told you that what if the control and management is done wholly or partially. So in case of outside, we are going to take outside wholly, not the partially. Okay, so hope this part was clear. When the control and management of HUF is either done wholly or done partially in India, in that case HUF is going to be resident of India. Now do you remember those other two additional condition which is satisfied by individual? Remember, if that additional two condition is satisfied by individual, then the individual is going to be ROR. Remember, that same additional condition is to be applied here in case of HUF. Now let's go for it. What I have written: if karta satisfy both additional condition of individual, remember, yes, in that case the HUF is going to be ROR, resident and ordinary resident. Is it clear? Yes. But what if sorry, but what if both the additional condition is not satisfied? In that case, what is going to be? The HUF is going to be RNOR. So hope this part was clear. Okay, let's go for the residential status of firm, AOP, BOI, local authority, artificial judicial person. Now again the same thing is written. If the control and management is either done wholly or partially in India, in that case these people are going to be resident of India. Otherwise if the control and management is wholly done outside India, in that case what is going to be? These parties are going to be non-resident. Okay, hope this part was clear. Now comes the main topic of this chapter, residential status of company. How the company is determined, residential status. Okay, first of all, if the company is Indian company, okay, if the company is Indian company, then that is going to be resident. Okay, but what if for the foreign company is going to be resident or not? We have to identify this. I'll tell you, the foreign company could also be resident of India if they are fulfilling some of the condition. Okay, let's go for it now. The law is saying the foreign company would be resident if POEM is in India. Now I have to understand what is this POEM in India. The law is saying if POEM is in India, POEM is in India, in that case what is going to be? The foreign company is going to be resident. But I have to understand what is this POEM, which means place of effective management. POEM stands for place of effective management, where key management and commercial decisions which are necessary to conduct business are made. Where the key managerial, let's go for it again, where the key management and commercial decision, majority decision, which is going to affect the business, okay, which is done to run the business, which is necessary to run the business. Okay, in that case what is going to be? This is going to be POEM. If this is POEM is conducted in India, in that case the foreign company is going to be resident. The foreign company is going to be resident. Okay, now How to determine POEM is in India? We have to know one more term. Okay, I'll let you know. Let me complete this first. So foreign company, if POEM is outside India, if POEM outside India, that case nothing is going to happen. That party, that foreign company is going to be non-resident. So this was very simple. Now what are the factors which determine POEM is in India or outside India? Okay, POEM is totally depend on whom. POEM is depend on ABOI. Now I have to identify what is this ABOI. First of all, what are the conditions which is to be fulfilled by the foreign company to determine they are resident or non-resident? Let's go for it. ABOI stand for active business outside India. Active business outside India. Okay, a company shall be said to be engaged in active business outside India if the following all conditions are fulfilled. Okay, the company is going to say that the active business outside India is going to be when the company is saying that if ABOI is fulfilling all of the condition. Okay, in that case, if the company shall be said to be engaged in active business outside India. Hope this part was clear. Now let's go for the condition which is written in ABOI. Active income, passive income. Okay, passive income should not be more of 50% of total income. Now I have to know this meaning of what is passive income. I'll tell you. Okay, don't worry, I'll tell you this part. Okay, what is passive income? Okay, just a second, we want to know about the passive income. Okay, so don't worry, I'll tell you what is actually passive income. So very first condition says that the passive income should not exceed 50% of what total income. Okay, less than 50% of total asset should be situated in the India. Okay, whatever the condition is going to be, it should be less than 50% in India. Whether first was of passive income. Okay, passive income should not exceed 50% of what total income. Okay, second part, the 50%, less than 50% of total assets should be situated in India. But what if more than 50% is situated in India? In that case, what is going to happen? It is going to be POEM in India. And if it is a POEM in India, then what? The resident, the foreign company would be resident of India. Okay, and would be taxable here. Take care. Next part, less than 50% of total employees are situated in India or resident in India. Definitely less than 50% of total employees. Okay, total employees should be situated in the India or resident of India. Okay, what if they are fully doing work outside? In that case, they are talking about less than 50% should be employed, the resident of India, otherwise they will be taxable. Okay. Now what about the last condition? Last condition says about the payroll. Do you know the meaning of payroll? I'll tell you, need not to worry about it. Okay. So payroll expense is incurred on Indian employee. Let's make a connection, because third point was saying about the less than 50% of total employee should be in India, right? Total employees situated in India or resident in India. Okay? And whatever the salary, the payroll is given to them, given to whom? The employee. Which employee? The Indian employee, not the foreign employee. Okay? So we are only taking the India part. We are only going to consider the India. Okay? So Indian employee should not be more than total of 50% of total employee. Hope this part was clear. Let's make a revision, very quick revision, jaldi. Passive income should not exceed 50% of the total income. First condition. Second, of the less than 50% of total asset should be situated in India. Third, total employee, less than 50% of total employee should be situated in India or resident of India. Okay, there are two conditions in this part. Okay. Fourth was of less than 50% of payroll should be given to Indian employees. Okay, hope this part was clear. Now I want to tell you what are some little bit terms which is used here. First of all, I want to know the passive income. Okay. Before that, we are going to start with what is total income. As per tax law, which income is I am going to take? ठीक है, as per tax law of country of incorporation, ठीक है, total income. Do you remember here I mentioned about the total income? So which total income we are talking about? We are talking about as per tax law of country of incorporation, as per tax law of countries of incorporation. Okay, or what if this part is not given, the very first condition is not given, then we'll go for this as per books of accounts. Okay, so here what I have written, when income as per tax law is not available, this is not, okay, when it is not available, in that case what we are going to take, we are going to take the as per book of accounts. ठीक है, total income as per book of accounts. Hope this part was clear. Now comes the thing, what is this passive income? Passive income which I mentioned here. Now let's go for it now. It is aggregate of income from transaction where both purchase and sale. Again, income from transaction where both the purchase and sale of goods from and to its A. Again, let's write it again. ठीक है, when the transaction is done from what? Purchase and sale, we are getting some income, definitely. ठीक है, when we are doing transaction purchase and sale, we are getting some income, right? In that case, that transaction is of what? Sale and purchase, I know this, and it is done to whom and from whom, right? It is done to whom and from whom. Again I'm saying it is done from associate enterprise or to associate enterprise, right? Between associate enterprise, when the transaction is between the associate enterprise. Hope this part was clear. Now we know what are the people, who fall in this associate enterprise. Do you remember the condition? Remember 26% or more of voting power of equity, shareholding and all. ठीक है, directly, indirectly, everything. ठीक है, so we know the condition which people are going to fall under this category of associate enterprise. ठीक है, now let's go for it. If the income from the transaction of what? Sale, purchase to whom? Of goods to associate enterprise, from associate enterprise, is going to be taken in passive income. ठीक है, there are some other income also which we are going to take for passive income. They are income by way of royalty, dividend, capital gain, interest, rental income. ठीक है, whatever the income is received by royalty, dividend, capital gain, interest and rental income, that they would also be computed for computation of passive income. Okay, let's read it. Income by way of interest is not considered to be passive income in case of company engaged in business of banking or PFI. Hope this part was clear to you. ठीक है, let's go for other things which I have written. Value of asset. In case of individually depreciable asset, how to determine what is the value of asset, which value is to be taken. Now, if it is depreciable asset, in case of individually depreciable asset, we are going to take the average of its value for tax purpose. The average of value for tax purpose in the country of incorporation of company at the beginning and end of the previous year, which means we are going to take the average of beginning and end of asset. Okay, where in which the country is incorporated, ठीक है, of previous year. We are going to take the average of beginning and end. ठीक है, this was of the case of individually depreciable asset. Now let's go for in case of pool of fixed asset being treated as a block for depreciation. The average of its value for tax purpose in the country of incorporation of company at the beginning and at the end. Same thing we are going to take the average of value of for the tax purpose in the country of incorporated on company, ठीक है, at the beginning and at the end. So this was the case of pool of fixed asset being treated as a block for depreciation. Now what in case of any other asset, we are going for the value as per book of accounts. Hope this part was clear to you. Now, what is number of employees? We know this. Average of number of employees in the beginning and at the end of the year is going to be taken. Now, what are payroll? I told you. Fourth condition was of payroll now. So, we have to see what are the things which is to be included in payroll. Let's go for it. The cost of salary, wages, bonus, other employees compensation is to be included in the payroll. Okay, now I'll tell you one more thing. POEM guidelines will not going to apply in some cases. Let's go for it. Let's see which are the companies where POEM guidelines are not going to be applied. Let's go for it and see. POEM guidelines do not apply to the company having turnover of 50 crore or less in the financial year. For those companies who are having less than or 50 crore or less than of 50 crore in the financial year, right? In the financial year, what is this now? The 50 crore, I'm talking about the turnover. When the company is having 50 crore or less than 50 crore of turnover in the financial, in that company, POM guidelines is not going to apply. Okay, so we are only going to take those companies who are having turnover of more than 50 crore, not of 50 crore even. Okay, we are going to take the turnover of those companies who are having more than 50 crore. Okay. Hope this part was clear. Let's go for the other section, which is scope of taxability. Okay, scope of total income. Now I know what is resident, ordinary resident, resident not ordinary resident, and NR. Okay, so we have to determine the taxability of total income of these three people now. I know one more thing, and let me tell you, we know very well. For resident of India, the income is taxable. The global income is taxable, right? Whether the income is earned or received in India or outside India. If the person is resident for that year, for the previous year, in that case, what is going to be happen? That is going to be taxable in India too, right? So, for global income, the resident is going to be taxable. So, very first part, let's take about the resident and ordinary resident. Remember, two of the additional conditions, one of the basic condition and two of the additional condition is to be satisfied for the ROR, right? Okay. So wherever the income is earned by him, whether in India, the source country or the resident country, the resident would always yes, pay the tax. Okay, income earned deemed to be earned in India. Okay, receive anywhere by whom, by this person, by ROR, then what is going to be happen? Taxable, whether it is Indian income or whether it is foreign income. Let's go for the second part. Income received, deemed to received, earned anywhere. Earlier what I said, it is received anywhere. Okay, now earned anywhere. Okay, income received, deemed to be received, right? Of which income? I'm talking about the Indian income. Again, for ROR, what is going to be happen for ROR? It's going to be taxable. Hope this part was clear. Okay, income earned and received outside India. Let's go for it now. The outside income. Okay, income earned and received outside India, but the business and profession controlled setup is in India. Now tell me, as I told you, resident have to pay tax whether he received in India or outside India. If he is resident for that year, okay, if he is a resident of that year, and residential status of individual is determined every year. Now, of every person is determined every year. Okay, we will go for previous year. Okay, hope you know this. So, the income earned, and received outside India. And what if the setup is done in India? In that case, again, resident have to pay the tax. Okay, the foreign income would be taxable for whom? For resident, ROR, resident, ordinary resident. Now, let's go for the last point, which says the income earned, received, and controlled outside India. Income earned, received outside India. Outside India, the ROR is earning the income and he is receiving the income. Now, we know for resident, the resident have to pay tax. So for this case also, the ROR would be taxable. As we know, whatever the income is earned by a resident, he will be taxable. He will be taxable globally. Okay, the global income would be taxable. Hope this part was clear. Now let's talk about the NR. As I know that for NR, only those income would be taxable which is earned by him in the India. We are not going to talk about the income which is earned by him outside India. We are not going to take even that amount. Okay, so we are not going to talk about, we don't bother, we don't want that money. We just want, the government of India just want the income tax which is actually earned by any person. Okay, now we are talking about non-resident, so here we are going for non-resident. So which means for these two part only, these two part, we are only going to take this part, because this part was actually earned in India, right? Income earned, deemed to earn in India, in case of non-resident, is going to be taxable, okay? Because he actually earned that income in India. We only have to focus on India's income, because we have to, the government of India want tax from each and every person. Okay, so this was the reason. Okay, so we are not going to take the other income which apart from Indian income for non-resident. Okay, so income received, deemed to be received in India, earned everywhere, again it's going to be taxable. What about the other two? They are talking about the income which is earned outside India, right? Outside India, Pardesh, है ना? We are not going to take the Pardesh income. ठीक है, Pardesis income, we want Pardesis income, but that should be Indian income. Otherwise, why will we bother now? ठीक है, let's go for it now. So the third case and fourth case we are not going to take for the non-resident. Income earned and received outside India, but business and profession controlled, set up in India would be not taxable. Okay, because this is foreign income and it is actually earned outside India and he is non-resident. Okay, when he is not a resident of India, then why would the income would be taxable? Okay. Fourth, income earned, received, control outside India would again not taxable. Now let's go for R and OR. Remember, when both of the additional condition is not fulfilled by the resident of India, in that case what is going to happen? The resident would be R and OR. Remember? Yes, we remember. Now let's go for again for every person who is a resident in India. R and OR is also resident of India because he already fulfilled the one of basic condition, remember? And if he fulfill any of the basic condition, in that case what is going to be? He is going to be resident, right? For if the person is resident in India, what is going to be? The income earned and received in India, or deemed to earn or receive in India, going to be taxable for every resident, right? So R and OR is also resident now. R and OR is also resident. So these two part would be taxable. Now let's read it. Income earned, deemed to earn in India, for whom? Now we are talking about, let's take the other color, yellow, for R and OR. So for him it would be taxable. Okay, because he is resident now. Okay, next part, income received, deemed to receive in India, earned anywhere, that would also be taxable. For whom? R and OR. Now comes the main condition. This point is actually made for R and OR. Okay, R and OR. This point, I'm talking about the third point. Let's go for it. Income earned and received outside India, where the income is actually earned and received outside India, but actually the business is set up in India of R and OR. The business and profession control set up in India. Okay, where the business is set up in India and control, the major management control is done by which country? The India. Okay, everything is done by here. Every controlling power is in India. The company who is in India, that is having the controlling power. Okay, so first of all, what I told you, that if the foreign company, the earning is done in foreign company, right? Receive the income earned and received is in foreign country, but The setup and management and control is done from which country? The Indian's company, the India's company, which is in India definitely, right? So in that case, that would be taxable. For whom RNOR, this part is just made for whom RNOR. As we know that for resident, each and every income would be taxable, right? And for non-resident, only that income would be taxable which is earned in India. So this part is actually made for whom? For this RNOR. Okay? For other, which is income earned received outside India, we don't talk about the income which is not earned in India. Okay, we only think about our government. Why should we think about others? Okay, so hope this part was clear. In this case, the income earned received outside India would not be taxable in hand of RNOR. Okay, so till this it was clear to you, hope. Okay, now you have to do your revision, go do and solve the questions as much you can, have do writing practice. Okay, subscribe my channel, hit a like button and share this video as much you can to every aspirant who are doing CA, CS, CMA. Okay, till then, this is Soumya Santosh. We'll meet in our next session. Toodles guys.